So overall, like, I mean, let's definitely talk about some trading. So like,
Yeah.
I think that, what everyone came here to hear is like, how do you go about trading? Like, do you have a system? Like, how do you
Okay.
manage risk?
So
What's
I
the
start.
alpha?
I started like, and that's why I think it's pretty interesting to trade, and I think everybody can do it because I started in a very rudimentary way. Let's say I started actually reaching out to people that I saw on the social media and looking for suggestions on books and trading. Right. So that's how I started. And over the years, I pretty much I started with doing chart analysis, right? So that's what my first path was to actually learn how to read charts, and then later on, I started reading data, right? So reading data, creating a few algorithms that could help me find the best coins to trade. Not exactly to trade for me at the moment, but later on, I plan to do this, but they auxiliate me on finding the best coins that are in the market based on data. So let's suppose I'm looking for coins that I'm gonna give you an example. It's not really what my algo do. It has nothing to do with my algo, but let's suppose you want to find the bonds that are below our side 30, let's say, which is the indicator, right? So you can just create an algorithm that every time a new coin pops under our side 30, you have it, you get an alert, let's say, right? That's just an example of people of things that you can do. So you can start figuring what you want to trade. Because I think that's a big step when you are trading. You must know first what you're gonna trade, right? And then when you know it, then you can start looking for strategy inside this particular asset, right? So let's say I'm gonna trade. I find out that Ethereum looks interesting. Then I'm gonna start looking for setups on Ethereum on how to trade it. I don't have an exact system at the moment, perfect
Okay.
system that I just follow. If that's the question, but I have, let's say, a
So it's
risk
like a
reward.
narrative approach in a bit, right?
Yeah,
Like what you just described.
yeah,
You're looking at
exactly.
the narratives.
I look at
Okay.
narratives, yeah, and sometimes I have to adjust my algo so I can look for this narratives of the moment, right? But I tend to manage my risk, right? And so I think that's the most important part is to manage the risk. So when I'm looking for setup, for sure, I don't like trading. So if I'm gonna say I have a strategy, it's something that I pretty much always follow. I don't like to trade much uh, low risk reward trades. So if you're risking $1 to and to gain $1, that's not really the usual trade that I like to take. I like to take more at least setups that are 2 to 1, right? So at least I'm risking $1 to make two. So that's usually what I always follow. At sometimes it's 7 to 1, 5 to 1, depends a lot on how the altcoin or the asset looks, right? So the more bullish you are on the asset, sorry, when the asset is more bullish, you usually have better setups. So you have specific points that you have very low risk, and you have a huge upside because it's growing very fast and quickly, right? So that's pretty much how what I used to follow as a strategy. So you can call that probably my main strategy. I don't get away of that. I don't buy things to do 1 to 1 setups because that requires that you have a very accurate strategy, and you when you
Yeah.
are aiming for more. So to put it in perspective for those hearing, if you are trading risking $1 to make $1, you have to win 51% of the trades at least, right? You have to win more than 50% of the trades. But if you are going for 2 to 1, then you have to win much less trades, and that goes way better later on. But the idea is if you are risking less money to make a lot of money, it's the best thing that you can get, right? And that also
Yeah.
allows you to. So yeah, that's the main goal. And also there's a thing though. So when you have a very accurate strategy, you can risk more money. When you don't have a very accurate strategy, you cannot risk that much money, right? So I think for beginners, the best thing to do is if you have a pretty tight investment, let's say pre-fi investment strategy, if you are like risking only 1% of your portfolio per trades, you don't necessarily need a very good strategy to make it long term. If you are at least like if you have a positive strategy and then you are risking a very low amount of your portfolio per trade, then you should do well in the long term. Although if you have a pretty good strategy, suppose you don't have a shitty strategy that only is 51% accurate 1 to 1, let's say. If you have a better strategy that makes more money, then you can also bet more money. But that's the issue, right?
Right.
I guess when you get to a bull market, people have strategies that make a lot of money because pretty much everything is doing well. So you can just throw money at everything, but you lose control of your risk, right? So you see a bull
Yeah.
market, people having a lot of trades that can just make a lot of money, but start putting a lot of money, and then you get out of um, the risk management, and then you lose it all later on, right? When the bear market kicks. Because the thing is, when you're trading trends, when a trend changes, you have to completely change like instantly, right? And
Exactly.
there is a thing that when you are trading trends, at some point you're gonna lose, obviously, because if you are trading, let's say, if it's a bullish trend and you are only buying stuff, then you're gonna keep making a lot of money as it goes up. But when it changes to a downtrend, you're gonna get away off of positions. You're gonna end up making a lot of money, but as it turns down, you're gonna lose money on that turn down, right? So that's something that you cannot uh, avoid at all, right? So that's why you need
Yeah.
a good risk management, right? If you just throw a lot of money, when it turns down on you, you're gonna lose it all. Especially people that usually, when you think about retail, they only get on crypto or whatever when it's pretty much close to the top. So they make a lot of money at first, but they don't they get caught on the turn down and they lose it all, right? Pretty quickly. So when you are very early, then you can probably see the turn down coming down. You can see the price falling, but you're still gonna get away, pretty decent profit because you got in so early, right?